mode.
All right, good afternoon, everyone. So let's get started here. Thank you for joining us today. I'm Mike Sedek. I'm the Managing Director of Retail Trading for Lightspeed, and we're thrilled to have Mark Moskowitz with us today presenting this webinar on pivot point trading. Mark is a 20-year veteran of Wall Street, starting back in 1990 as a financial advisor, and then moving to hedge fund manager, and now he's an independent trader. So that really gives him a unique and accurate perspective on the markets, and he's got a great ability to understand the reasons behind the major moves. So in addition to his trading, he's a passionate educator, and he's a daily contributor to shinesroom.com. You can actually catch him there every morning pre-open talking about the pivots. So speaking of Shine's Room, I think we also have Dave Shine that just joined us. So maybe we can get Dave to say a couple words before we turn the presentation over to Mark. Just a few housekeeping items. Like all our webinars, this one's going to be recorded and uploaded to our website. So if there's anything that you miss, you can always come back at a later date and view it. All our webinars are posted on lightspeed.com/webinar. As a matter of disclosure, just please keep in mind that this webinar is for informational purposes only. Nothing presented today should be construed as investment advice or a recommendation by either Lightspeed or the presenters to buy, sell, or hold any specific securities. We want to keep this as interactive as possible, so please ask questions as we go through the presentation. If there's anything you want to ask, you can do so by typing your questions into this webinar chat box, and then we can take breaks throughout the presentation, or if you prefer, we can wait until the end, and we'll do a quick Q&A session. All right, so hey, Dave, anything you want to add before I turn the presentation over to Mark?
Yeah, sure. If I could grab 2 minutes of your time. Hey, everybody, this is David Shine from shinesroom.com. I wanted to grab 1 minute to thank Mike Lightspeed, Shine's Trading Room, and, of course, Mark Moskowitz, as you guys know him. I know him as Mosk, for taking the time out to enlighten the trading community with his experience and expertise in trading. We love to give the Lightspeed community the ability to peek into our extensive, ongoing, diverse education and try to really enhance the trading community's education out there. So this is a lesson in pivot trading, and you could catch Mosk and his pivots, as Mike mentioned earlier, pre-market at Shine's Room. I know Mosk and his pivots may sound like a band, but it actually is a real thing. So I'm going to pass it over to Mosk to get started, and I just want to thank everybody again for joining us today. So Mosk, you guys are really in for a treat, as Mosk is a great presenter and a super educator in pivot trading and trading overall. So go ahead, Mosk, take over.
All right, Shine, thank you very much, and thank you, Mike, and I'd like to echo thanks to Lightspeed for allowing me an opportunity to spread the gospel of pivot points. It's a methodology that I have followed for a long time, and it's really the basis for how I make my most important decisions in trading. And hopefully when we get to this presentation, you'll have some good education and a good understanding of why I use them, and perhaps how you can use them to help your own trading. So let's get started. So let's just go over a quick overview of what we're going to discuss today. First, we're going to talk about what pivot points are. We're going to talk about why you want to use pivot points. We're going to go over some characteristics of them. We're going to discuss in detail each pivot point and the trade signal that comes with it. We're going to discuss how you're going to use pivot points for stop levels, your initial target prices for each point, and then show you how you can use the pivot point levels for support and resistance. And then we'll go over a couple of resources, how you can learn about pivots and find your pivots out on the web. And then, as Mike said, we'll be happy to take some Q&A either as we're moving along or towards the end of the presentation. Okay, so what are pivot points? Pivot points are price levels of significance that are used by technical analysts in financial markets. Pivot points are specific mathematical formulas that act as a predictive indicator of price movement. This second point is truly the main reason why I use pivots. The fact that I can predict before the market opens the levels that I know I'm going to want to trade with allow me to prepare my day early. I know what I'm looking for. I can avoid those choppy, miserable days where nothing's really going on if I don't get a good signal. And I know exactly how I'm going to look to trade each stock, each index, because I'll trade S&P futures as well with these. I'll trade metals with them. So there's a lot of different securities you can use for pivot points. You can use them for all different time frames. Myself, I'm a little bit more of a longer-term swing trader and also intraday trader, but I'm not really looking to take the quick scalps, but you can with this kind of methodology. So it really fits very well with all different sorts of time frames. It's a widely used indicator. It seems to be in a sweet spot. I would never know what is the exact amount of usage you need to make an indicator work, but it seems to work very well. You'll find many times where a support pivot is the low of the day or a resistance pivot is the high of the day. It works enough to convince me that there's people out there using it, but perhaps not oversaturated and not useful at all. I believe that with its predictive nature, that pivot points provide clarity for the trader. For those of you that have been trading a long time, I think you all, if you've been successful in this business, you know what it means to be clear about your trade. You know that when you're looking to buy something, it's telling you to buy it. There's not a second guess in there. And for me, I use pivot points exclusively for my directional indicator. So I would never short a buy pivot or get long a sell pivot. If the pivot's telling me which direction to go in, that is the direction I trade. And that helps me to be very confident, and I believe clarity equals confidence when it comes time to really press those keys. So again, the predictive nature allows me to be very clear about how I'm going to transact for the day. And when you hear me on Shine's Room, when I do my 10 minutes in the morning before the market gets open, you'll hear that there are days where I feel like this market's just not setting up very well for me. And then there's days where I think the market's setting up great and I'll be more aggressive. So it's being able to have that mentality that I think allows you to be a good trader and a real successful trader, especially in this hyper-volatile market that we're getting. Pivot points act as indicators of trend. That's where we get our signals from, our buy and sell signals, but also trend reversal. So it's going to hopefully help you to stop out and be smart when things aren't looking so great. So an indicator of trend and trend reversal. We can also use it for support and resistance. And then I find that they work great with other indicators, especially the indicators that I teach in my course, that I think they work very, very well and really complement each other. Okay, so some quick characteristics of pivot points. There's one breakout pivot point, and that's called R4. There is one breakdown pivot point, and that's S4. So the R stands for resistance, so think of R4 as the last level of resistance in the pivot point equation. S4 is a breakdown pivot, and we're going to discuss these in a little more detail. I just want to give you an overview. So S4 would stand for support 4. So again, that would be the last support level in the pivot point equation. There are two reversal pivot points, R3 and S3. There's also one pivot point, which is more of a support and resistance level, not a trade entry level. Another good characteristic to pivots is if you're a straight pivot point trader, the minimum that you're going to get from a reward to risk ratio is 2-to-1. So you're immediately, by using pivot points, putting a very good ratio of reward to risk in your favor. Obviously, as traders, we all know that that's hugely important. The higher our reward to risk, the better off the trade's always going to look to us. So a straight pivot point trader would look at least 2-to-1. Of course, depending upon your entries, it could get better. The pivot points themselves are calculated using the previous day's open, high, low, and close. So today we'll use the pivots. We'll use the open, high, low, and close from today to calculate tomorrow's levels. So that's why I say I can get my levels for tomorrow, today, tonight, in the morning before the market opens. I use what's called the Camarilla equation. That equation seems to fit my style of trading the best. The pivots are a little tighter. We're going to go over what the formulas are. The pivots are a little bit tighter than a couple of the other types of calculations. So the Camarilla equation works best for me. And then the pivot point is calculated using the average of the high, low, and close from the day. So the pivot point is calculated using the average of the high, low, and close, and the other 4 pivots are calculated with an equation using the open, high, low, and close. Okay, and here is the actual equation. So you see that's how R4 is calculated, C plus the range times 1.1/2. Then R3 is calculated by the close plus the range times 1.1/4. the pivot point, and so on and so forth. I don't want to belabor this because you'll be able to see this when we go through some of the resources about what you're going to use, but these are the formulas that are used to calculate the pivots. Again, the Camarilla pivot point equation. And here's a quick example of what you may see when you look at some of the resources that we're going to go to. So in the upper left-hand corner, you see the open, high, low, and close. These are just hypotheticals that I made up. The open 25, the high 26.5, the low 23 3/4. So on the close 24.95, and you'll get a calculation that looks somewhat like what we see here: R4 26.46, R3 25.71, the pivot point, S3 and S4. So the thing that you should note, though, is that the difference between S4 and S3, for example, that arrow got drawn a little bit too high. The difference between S4 and S3 is always going to be half the difference between S3 and R3. So that's where you get your 2 to 1. The slide's a little bit messed up, but still the same concept. So you're always going to get your 2 to 1 through that calculation. Okay, so let's discuss each pivot in more detail so you can get a feel for what I look for in the mornings and what I look for when I'm doing my analysis. So let's go from first we're going to discuss the R4 breakout pivot. And again, the R stands for resistance, and in the Camarilla equation, R4 is the last level of resistance. There's actually R1 and R2, which I don't use in my trading, but they are there. So there's R1, R2, R3, and R4. R4 is a breakout long pivot. It's considered the last level of resistance in the trading methodology. It's going to signal the trader to take long positions or look to cover short positions. The signal is created when the stock trades above R4, whether that's through a gap open or whether that is after the open as it trades up. So once the signal goes above R4, once the stock goes above R4, that is now put on a pivot point buy signal, a breakout buy signal. It's considered a very strong signal, especially if it happens somewhat early in the day and is able to hold R3. I like to wait for confirmation of my signals, so I usually like to wait for that higher high move before from the first candle that broke above R4. And that gives me good confirmation that it's a real signal. A bit of a word about my general methodology is I would consider myself a trend follower with a mean reversion slant. So very often when I'll get a breakout, a pivot point breakout, I'm usually waiting for that pullback into a level that makes a lot of sense. So even though I'll use the pivot to tell me what the trend is, so in this case on the R4 pivot it would be a buy trend and what would I consider to be a strong buy trend, but I'm going to wait for that pullback. I'm not a breakout trader, so I'm a trend follower, and I like to wait for mean reversion. Very important, that mean reversion part. I don't want to get caught holding the bag. And we have an example here of a chart that we pulled up from last week, KLA Tencor 2-minute chart, and we're looking at, notice the yellow line is R4, and we get that quick move up early on in the morning around 10 o'clock, a break above the R4. That puts us on an alert that that is now on a buy signal. And as I said in the opening, once it's on a buy signal, I'm not looking to short it. That's not something I'm interested in. Yes, I may have missed the entire reversion part, but I'm willing to do that. I don't ever want to, personally, I do not want to trade against my pivots.
Hey, Mark, you want to just quickly explain what reversion is? We're getting some questions about that.
Sure. Reversion is, if you can see my mouse here, you see this big pull out, you see this big move here up in KLA, and that's really just over the course of 20 minutes, a half an hour, very big straight up move. The reversion, or if you just want to use the word reverse, the reversion is this entire pullback in here. So if you go over again what I call my strategy, I'm looking for the pivot to help me identify the trend, and in this case a break above R4 alerts me to a buy trend. Okay? But the way I like to think of this is that just puts me on alert. I'm not necessarily buying here or here. I like to wait for the reversal, the reversion, back into a level that makes a lot of sense. Now, this is just a straight pivot chart, so there might be moving averages here that might be telling me something else. But just in the lesson that I'm trying to give you here, the concept is Here's the trend. Once this buy signal is in place, that to me is the trend. Even down here, the trend is still a buy trend. That's what's most important to my methodology. But for me, I guess you could call me kind of a value player because I don't want to pay up here. I don't want to pay all the way up here. I want to pay as close to support, which in this case R3, as you see in my context here, says textbook pullback into R3, which acts as support. I may start entering in here, and I may enter a little more in here, and I might like to push it up in here, but that's for a later time. The concept here is as long as it's on this pivot point breakout signal, I know I want to buy it. I'm not going to get confused by trying to short this move because who knows what's going to happen. This is obviously we look at it in history. So this reversion part is really what I'm looking to try to take advantage of. Then you could see it started to make a nice move back up and really never tested that again and then finished very strong throughout the rest of the day.
Okay, so R3 is your support level. What's the yellow line?
The yellow line is R4. The yellow line is R4, and that's when we first got our first break above. So you can see that that corresponds to about $40.60. And then you can see R3 is about $40.35.
Got it.
Okay, good. Anything else?
Nope, I think we're good.
Good. Okay, so let's move on to the next pivot, which is really just the antithesis of the R4. It's the S4. So the definition is just reversed, flip-flopped around. So the S4 breakdown is a short pivot. It's going to alert us to be looking for selling long opportunities or to initiate new short positions. So again, S4 is considered the last level of support in the Camarilla equation. So if you're breaking down through that S4, you know it's a strong, solid move. You had to get through S1, 2, and 3 before you could get to 4. So if you think that every time a stock gets through a level of support or resistance, it should tire itself out, right? That should be some level of effort to get through that support. The fact that it can get through S4 tells you there's some real sellers out there. And this is how an institutional person thinks about their trading. They think about, well, if we're really getting through, we want to just press it and press it and press it. And people who really have a lot of capital are the ones who drive this market. We're just trying to take advantage of that. That's why I like the mean reversion part of the strategy where you come back a little bit towards the center of the equation as opposed to being so overextended. And we use some RSI calculations, relative strength calculations with a MACD to help us calculate when we believe we're getting too overextended into one side or the other. So again, staying with this signal here, the S4 is considered the last level of support and is going to signal us an opportunity to sell long positions or potentially initiate short positions. The signal is created, the S4 signal is created when the stock trades below S4, whether it gaps lower or whether it trades post-open. And we're going to look at a Baidu chart. Again, the signal is confirmed with the lower low from the candle that first breaks down through S4. So again, I'd like to see that confirmation, and I'd like to see the reversion. So here's a chart that's a little more detailed than the last one. You can see S3 is up here, this green line. S4 is down here, the yellow line. So Baidu opens up, this is a 5-minute chart from the same date as the KLA 10 core chart. You can see it tested S4 early in the day. Actually, S4 held up as nice support.
And Mark, are you always using 5-minute candles, or does it vary based on what your time horizon is for the trade?
I mostly focus on 5 and 15s. So I will look at 15-minute charts as well. It usually works well for some of my other indicators. And like I said, it really depends on my mindset for the trading day. If I'm thinking a little bit more long-term, I'm going to watch the 15-minute chart as well. But for most part, I take my cues, especially when it comes to candle patterns, from the 5-minute. If I think I have a really good opportunity to trend all day, I'll go to the 15-minute because I want to see that longer picture. I want to go back a couple more days on my chart. So that'll help me do that. But again, I would say that 70 to 80% of the time I'm focusing on the 5-minute chart.
Okay, thanks.
Sure. So here we see an example of Baidu, and we see how beautifully S4 held as support. So it got through S3, which is the green line. You can see that green arrow pointing at it. It got through S3 fairly easy early in the morning, came down to S4, held support, bounced nicely. See a little bit of a bullish engulfing candle here, which I didn't even notice when I was making this chart, and bounced right up to S3 and then failed again. So what we're seeing here is essentially the pivots acting as some support down here, acting as resistance up here. And, you know, with a name like Baidu, this is, as you can see, it's a $2.20 move. There's actually some money to be made in here, but again, that's not necessarily the purpose of this conversation. The purpose of this conversation is to understand that there are levels that you can act within, and understanding how the pivot points work will give you a level of clarity that I don't think a lot of traders have right now. Hopefully this could be something that's very, very educational for you. So, but also you see that a nice big pop here over the course of 6 candles, and then you start to see some indecision. So for those people who are big candlestick fans, you're going to see nice green candles, right? Little exhaustion move up to the top, a little bit of change in pressure, and then the stock starts to fade again. So this is another good example of the trend and then a little bit of a mean reversion and then back to the trend continuation again. And now the red line, you should also understand, is the pivot point line. So remember, we have our 4 levels, our S3, 4, R3, and R4. We also have the pivot point, another level that's going to act as some great resistance when it's lined up to one of the 3 levels, which we'll talk about. So this gave us some confirmation of the S4 breakdown, and then all again I'm looking for is that reversion play, the reversal play back into resistance. I don't really want to chase it here. If I was able to catch a trade here, that would be fantastic, of course, right? And that's where I trade that's where a lot of my volume comes from, because what I'll do is I'll have a position here that I like to call my core intraday position, which is a level that I like to hold for the majority of the day, but then I'll also ramp it up to much bigger size when I feel the time is right. So if I'm getting into a core position, hopefully I'm pressing the trade, building up into share size as it's coming down, and then of course as I start to see some indecision down here with the observance of a doji, another doji, and then some small bodies looking to take some off. Bullish engulfing handle, I might take even more off, especially as we're coming into 11:30, 11:40, and then of course starting to put some back on again as we come back to resistance. So understand that there's a lot of opportunity in here, but I find that one thing that the pivot points really help me do is to just be patient, to be a good learner of what market sentiment is like, and I believe that it's pivots that allow me to trade with clarity and allow me to really choose direction and be smart with the direction. So if you're entering up here, obviously there's a quick stop once it confirms an S3, which we'll talk about later in the presentation. Same here as well. So there's a lot of opportunity to have shorted and maybe shorted again.
All right, so Mark, let me take a couple of questions because we got a bunch coming in.
Great.
So the first question is, how do you actually get these pivot points on your chart, the lines on your chart? So that's actually a feature that's built into the Lightspeed chart. So if you go to the studies function, you can just add pivot points and they'll appear right on your chart.
Correct.
The next question is, what's your confirmation of the S4 breakdown?
Let me go back to the right slide. Well, you see we touched S4 here, so I wouldn't really look at that as a great S4 signal. The only thing I might do is potentially look at that as a short only because it held S3. But really the confirmation comes from this move down at 11 o'clock and then these lower lows. Even though they don't stay lower, this is really the area that's giving me confirmation. So this first move is a great move. I like that it penetrated, but then of course I like to see that additional move down here. Again, using my methodology, this is just one part of it, but the methodology, like I keep saying, I'm waiting for that reversal. Even though I want it to reverse, I don't want it to reverse all the way where it changes signal. What I don't want to do is I don't want to be the one shorting it here and then riding it up and getting stopped out right at the worst times. That's why I wait. That's why I'm patient. So this move here, this lower low, is what really got me the confirmation of the signal.
Okay, cool. And can you use this strategy for both day trading and for longer-term swing trading?
Yes, and I do. The pivot points are created each day using the open, high, low, and close, but I use them for swing trades because I have a certain way that I look at my swing trades when it comes to position sizing, because I look to take home smaller shares than I trade throughout the day. I think that's an important part for me because I can't control risk as much. So if I'm in a swing trade and I believe it's going to go in one direction, so I want to hold on for that larger move, I will calculate and I'll keep using the pivots as a place where I can either add, if I think the next day's open is going to allow me to add some shares back in, as well as take some off and maybe trade around it a little bit as the trade works. The other thing I do in one of the accounts that I trade in, which is more of a swing account, I will take the weekly pivots using the same equation. So what I'll do is I'll take the open, high, low, and close from the previous week, and that'll give me the same 4 points plus the pivot point, and I will use that as my direction for trading with a swing trade. So I do that in a couple of accounts, and I like it because it gives me some extra confirmation, especially on the swing trade. But like I said, this is a great this pivot points work for intraday scalpers, longer term traders, kind of all across the board.
Okay, and then the final question was, it looked like the S4 was holding up there. So would you risk selling again when it hit the red line toward the end of the chart?
Well, yes, this is actually the perfect setup for me. This is exactly where you want to be shorting. If you're, I might potentially be shorting here as well, but I try to avoid that middle part of the day, which I think probably most of us do as traders. But yeah, when we're here, when it's 1:30, 2 o'clock, and I'm seeing it right up against, to me, that's as good a trade as I could possibly find. For someone who likes to play that reversion part, that's exactly what I'm looking for. I'm looking for the signal to hold. Because what would have happened is if we bust through the red line and the green line, putting us through S3, that stops me out. That's my stop out, which we will discuss how you use these as stops later. So if I'm able to execute a trade up in this 118 quarter level, let's call it around here, and I know that I'm going to be stopping out 50, 60 cents higher, but then again, I'm also knowing that the low of the day is all the way down here at 115.5, or perhaps 116 and change, which has been holding up as good support. That's at least so I'm looking to risk 60 cents to try to make $2. That's 3.5 to 1. I can live with that. I can live with that every day. So for me, that's a great level. That's a perfect spot where I'm going to do it. Of course, we're talking about pivots in a vacuum as opposed to using some of the other indicators that I have, but just using straight pivots, it's a wonderful spot to be looking to enter your trade. And believe me, like I said, sometimes you have to be patient. This is all the way at 1:30 in the afternoon before it really set up to be your great level. Because here in the early part of the morning, you actually don't have the signal, which someone was astute enough to point out, which is true. So even though this is a great level to do it, it's really not on a signal, so that's more of a scalp trade for me. And then back in here is really the place where you can make your most money.
Okay, yeah, makes sense. All right, let's move on.
Fantastic. Thanks for all the questions. Do appreciate it. Okay, so those are our two breakout and breakdown points, R4 and S4. Now we get into our reversal points. We've already discussed S3 a little bit because we're using it in the Baidu chart, but first we'll go through R3. So the R3 pivot is a reversal pivot signal. It's reversing the fact that the current trend higher has been broken and alerts the trader to either be selling their longs or thinking about entering short positions. So think of it, and when we look through the chart next, you'll see the stock was on a rally, right? Rallied up, got above R3, came back down again. That break of R3, because as we all talk about, when yesterday's resistance is now today's support. So once it gets above R3, that should hold as some level of support. When it doesn't hold as a level of support, I think to myself that, okay, the stock is tired. Buyers are tired. They're not out there anymore. Now sellers are in control. It's reversed the current trend. So that current trend higher has been broken. It's alerting myself to sell my long positions if I got long. So if I got long down by S3, to sell those long positions, or to look for a good entry point to initiate new short positions. As I just discussed, the R3 signal is created when the price moves above R3 or resistance 3 and then back below. The price can gap above R3 on the open, or it can trade up there throughout the day. The signal is going to be confirmed again with the lower low from the first candle that moves down through R3. And here we see a 5-minute chart, Abercrombie & Fitch. So this green line is R3. See the yellow line up here is R4, and the pivot point is this is the pivot point, the high plus low plus close divided by 3. So you see here, Abercrombie & Fitch opens up and rallies right up through R3. Of course, we start to see some candle formation. So if you're a big candle person, you see this bearish engulfing candle. That should be the first key that the stock is maybe running out of some strength. We see it break through R3. But really, these couple of candles show me some support there, no real breakdown. Finally, when we get this move, where I have the arrow pretty accurately placed there, when we get this R3 move down through below all these candles, that is alerting us of the lower low right around 65.5. And that's really the spot where we want to be putting some shorts on. I might be putting some on here at the tops of these shadows with maybe a stop at the new high. But overall, even if that's the case, it's really a smaller position, what I would call a feeler position, maybe 15-20% of my maximum position. So once I feel comfortable that this signal is on, then I'm really starting to press it and really try to press this trade down. It's terminology I use a lot, pressing the trade, I believe, very important attribute to have as a good trader. So then you can see here, stock really came down pretty hard. All of a sudden you get the long doji signal, long leg doji down here using the pivot point for temporary support right in the kind of the quietish part of the day. But this R3 sell signal worked very well. Again, more reversion, more mean reversionary tactics, and you can see that here's some resistance around the 64.80 level. So again, R3 signal reversing the trend, this quick move up from 9:30 right to about 10:30 or so, first hour of the day. Then the break below R3, and then the lower low candle confirms it, and then the pukage, which is exactly what you want to see. Great textbook setup, beautiful, easy trade to make, and one that is good to take advantage of. Now again, if you're long this position, maybe you were overnight. One of the questions was on a swing trade. If I'm overnight this position long, well, I'm going to probably be looking at this opportunity as an opportunity to sell my long position, maybe get back into it at a more advantageous price, but try to save some money, get back to long for the end of the day if that's the desired direction I want to take. But of course, if I could save myself a couple of dollars as a swing trader, I'm going to try to do that as much as possible.
Hey, Mark, just to clarify, what do you mean when you say pressing the trade?
Pressing the trade for me is adding to your winners. So that's really the thing that I try to teach a lot is when that trade is working for you, you want to build as quickly as you can into a desired share position. It's a very important part of my program is getting people to understand different share size tactics. I have basically 3 share sizes that I focus on. I have what I call my core overnight position. I have a position called my core intraday position, and then I have a position called my maximum intraday position. And basically, for the purpose of day trading, I'm in a core intraday position if I believe I'm on the right side of the trade. So I'll always try to keep that position on as long as I can because I really do want to try to let those winners run as much as possible. So knowing I have a core position, I'm going to try to hold that until my target price or until I get stopped out of the trade with what I call change in trend. And then when I press the trade, that's the number of shares that are in between my core intraday position and my core maximum position. So to give a little bit of a secret away, a little extra lesson here, my core intraday position and my maximum intraday is always 3 times my core position. So if my core intraday position is 500 shares, I'll always look at a maximum of 1,500. So if I'm right, I want to build up as quickly as I can to 1,000, 1,200, 1,500 shares, and then I want to lay back when I start to see the trend ending. So using this ANF as an example, if I'm in some shares here, I'm going to really be pressing this trade. So that's what I mean by pressing. I'm going to be adding into my shares until there's really no reason not to. I might start to take off a little bit here when I see these 2 candles that scare me. And then maybe taking off a little bit more here and more support. But I always want to keep adding to my trades as they're working and then playing around with the share sizes that make the most sense. So I know it's a little bit of trader speak, and I apologize for that, but I hope that explains it well. Mike?
Yes. Yep, thanks.
Okay, anything else, or is that it for now?
Let me see what we got coming in here. Not sure you want to get into this on this webinar. Do you want to? There's a question about explaining the bullish versus bearish engulfing candle.
That is a lesson unto its own. I do appreciate that question. I would love to, but maybe we have time for it later. So so put a little question mark next to that one.
Yeah, I thought we might get a little off topic with that one.
Exactly. This is a bullish engulfing analyst, so hopefully you can kind of read from it what's going on there. But we do education. Obviously, Shine's Room. It's something we pride ourselves on. So head over to the site and you'll hopefully learn some stuff there. Okay, well, great. So we'll move on from there. And thanks again for all the questions. Okay, so now to the last reversal pivot, which is S3. So hopefully by now you're getting an understanding. Hopefully by now you're getting a realization that that these pivots are all the antithesis of each other. So the reversal pivot, which is an S3 pivot now, stands for, again, support 3. And it's a reversal signal indicating that the trend lower has been broken or reversed, and it's going to alert the trader that you want to be long or cover your short positions. The signal is created when the price moves down below S3 and then back above. We'll look at a fun little Amazon trade in a minute. And, of course, the signal is confirmed with the higher high from the first candle that breaks S3. So it's kind of, I know it sounds a lot of repetition, but I believe that repetition is what makes people good at what they do. We don't want to be generalists. We don't want to be jack of all trades. We want to be great at a few things every day, and that will make you a great trader. So here is a chart of Amazon, 5-minute chart. Go through a lot of stuff here. Wow. So we see S4 is this yellow line, 218.17. We have S3 right here, 219.84 is S3. And then we have the red line is the pivot point. I even put in here R3 just to give us a little idea of what's going on. So we see that essentially Amazon is in a very choppy mode early on in the day, right? Actually comes down and holds this green line, which again is S3. The red line is the pivot point. So one thing which I like about pivots is there's a couple of wicks, again, a candle lesson. There's some wicks that go below, but this is not really giving me a signal. And for my style of trading, I find that getting caught in these this choppy action is very difficult to deal with. So when there's no pivot signal, I really prefer not to trade. And these are pretty wide swings. I mean, you're talking about $2 and $3 candles here on 5 minutes, so very volatile. But the bottom line is I find this to be a very tough time for me to trade. So I want to avoid these choppy, trendless kind of markets. I want to get in where I feel that I'm comfortable that the trend is intact. So when you analyze this chart, and again, you're going to be able to go to Lightspeed and look at this presentation over and over again. When you come to a slide like this, notice what you're seeing. Notice that this is like the black hole for someone like myself. This is not where I want to be. I want to be looking at other opportunities at this point. But once I start to get this confirmation here, I want to have my attention focused on this buy signal, and you can see the difference between the early part of the day here without a signal, and then once the buy signal came in, how beautiful that really was. So let's at least just interpret what else went on here. So again, choppiness, avoid that. All of a sudden, the quick move down, 3 candles down, and you see this last candle takes the exhaustion move all the way down to S4. And that is a very textbook, lovely way to end the trend, the downtrend like that. A touch of S4 and a quick rip up. I mean, this is $1.50 right here in one 5-minute candle. So that is a beautiful move. Getting back above S3, and you see where I have my arrow pointed to the S3 confirmation with that higher high. So again, hopefully if I was smart, maybe I had a little bit of a bid down here and my bid got hit, and then it starts to move up, and when I get confirmation is when I, again, quote-unquote, press up the trade and start to really add in shares. I most likely would be selling a little bit into this pivot level because I do respect that, and you can see I respected it quite a bit early in the morning. But once it gets through here, my confidence level in this trade has gotten very, very high. If I'm not up to a really good-sized position, somewhere well up closer to my max position, then I'm making a big mistake. I'm not trading well that day. And even though there's some gyrations here, you never got back below, and you can see we really moved very strongly up the rest of this chart, which takes us to about 2 o'clock. So R3 acted as some resistance. So of course you're going to be taking off some shares. That's what I do. I'm trying to press, take off when I can, when it makes some sense. I always love to hold on a little bit just in case the move gets egregious and goes crazy. But again, the direction wins out the day. When we were directionless, when we didn't have a signal, we were just floating around here getting chopped up. Don't be that person. Don't be the person getting chopped up. Be the person that waits and is patient for the trend. Once you see the trend, then don't be afraid to really take advantage of that. Great chart. I love this chart. It really worked great, and it's something I think a good example of what we're looking for as we go through the methodology. Okay, I'm going to move on if that's okay, Mike.
Sure. Mark, how many stocks are you monitoring at once?
Well, a very, very good question. I have in the portfolio that I trade most actively manually, I follow 30 names, and they're pretty much very constant as to those names. Some will come off, some will come on, but for the most part, I try to keep them very similar. I think that gives me a very good edge when trading. When I mean edge, I say that it gives me a leg up over my competition. Someone who's maybe trading a stock for the first time or is not really as schooled as I am in how these stocks trade. And I do believe stocks have a characteristic, and when you can pick up on those things, you can tend to make a lot of money with it. I follow about 30, but the way I analyze each trade and the way I analyze each stock in the morning before the market, again, the predictiveness of pivots, allows me to take that 30 names and really come to about 6, maybe 10 levels that I really want to focus on. And then usually I'll put out limit orders and let those markets come to me. And when they do, if I get filled, then I'll start to work on my money management. So I don't use a wide universe of names, and I try to stay very close to a lot of the names I follow. I don't really go crazy looking for the hot name. I'd rather be very comfortable with the name I follow. But again, even though I'm following 30 names, you know, sometimes I'll come up with 3 or 4 signals. Sometimes I'll come up with 8 or 10. I never really know what it's going to be. But a lot of times, if I see a similar setup in a few different names, it's going to give me a thesis, a broad market thesis for the day. And I consider myself more of an analyst than a trader because I think my analysis is 70% of the work, and the trading part is simply just being the executioner of the trade. So I really focus a lot on my analytical work, and it helps me to really come up with a broad thesis. And if you go and you look at, let's say you head over to Shine's Room and you look at my blogs over the last couple of days, it allowed me to come up with a thesis that I thought the market would have a solid run up until today, and I had used on the S&P 500 futures a level of 12.15 today as I thought maybe a stopping point because we were getting overbought on some RSI and a few other indicators that were telling you that. I missed it. It got to 12.16 before pulling in. So by having a good handle on pivots and by being able to do this before the frenzy of the market, when it's the calmer time in the pre-market, it allows me to come up with this macro thesis. And by having that macro thesis, I was able to swing trade a little extra shares yesterday. I held on some Apple overnight. I held on some Acme Packet overnight. I held on some JP Morgan overnight. And I was able to sell those pretty much first thing in the morning, 10:15, and I was pretty much done with trading by then, and then I let the market just shake out for the rest of the day. So have a good macro thesis. Understand how markets trade. I mean, markets are just made up of the stocks we trade. So, and right now there's a very high correlation between stocks and the market. Correlation meaning we all tend to move in the same direction. The same tide tends to float all boats, as the saying goes. Float all boats. So being able to have a good universe, understand how the universe trades, and go and then try to take the best advantage of it as you can.
Hey, Musk, how are you? This is David Shine. I had a couple quick questions for you, if that's all right.
Sure.
I want to, I'm not sure if you heard me, Musk. This is David Shine. I had a couple quick questions, and I want you to get back to the rest of the presentation, as I believe we are starting to run short on time. I had a couple quick questions. Over your experience that you've had, which price range of stocks do you think are the most effective for your style of pivot trading? And are there any stocks, I guess, or names or price ranges or certain areas that you do not touch or you're not, maybe your strategy doesn't work as well in?
My 30 names are pretty vast, and they cover lots of different sectors and different price ranges and different capital values. I would say the most important thing for my strategy to work is I do like very liquid names. So I'm not trading in I'm not trading in penny stocks or illiquid names that don't have a lot of volume. That's why I don't trade very much in the middle of the day or on Fridays or Friday afternoons, because I like to have a lot of volume, which gives me a lot more. I don't mind the volatility. I love volatility, but it has to be accompanied with volume for me to have that. My bigger names are sort of the common high-tech data names: Apple, Amazon, Baidu. I love to trade, but I also trade GE and NVDA, and I trade the bank names. I'll trade JP Morgan, Bank of New York, Goldman Sachs. I do trade some Bank of America. I also trade a lot of the ag names: CF, POT, HEU. So I'm kind of all over the map when it comes. There's really no common theme other than the fact that they're all very liquid and they're all names that I can hit a bid very quickly and not have to worry about killing the stock or lift an offer, and same thing. So that would be the only common trait, and that's what I would try to stay focused on if you like this methodology.
So, Mark, specifically, what kind of liquidity levels are you looking for in these stocks? Are you looking for some minimum average daily volume?
It's really more of a feel. I don't really have a necessary metric for that. It's just once I'm trading them, like I said, I don't change my universe very much. I might, like I said, bring in a name or take out a name here and there, but for the most part, I just know the names that I trade, and I'm very comfortable because I've traded them for so long.
So you just want to make sure that you can comfortably execute your order without moving the bid or the offer?
Correct.
Okay. And if I can ask a question specifically on this slide that we're looking at here. So near the S3 confirmation with the higher high, which of these candle bars are you actually looking at? Is it the first red one that crosses? Is it the first green one or the second green one that the arrow is pointing to?
It's the second green one that the arrow is pointing to. That's exactly the confirmation. The first red one, again, you made a little bit of a higher push there, but not something that I'm really that excited about. But once I feel that that candle closes and the body's big enough and it's definitely above the high of the last body and the high of the last three bodies, then I'm off to the races for me. That's all I need to get started and get big in that thing.
Okay, cool.
Okay. All right, so if that's it, let me push forward so I can get through the whole thing, because we're not even that close to being done. So let's tell me if we are up against time. I can always pummel through very quickly. So
yep, let's just go toward the end, and we'll hold off on the questions.
Okay, so talking about using pivot points as your stop levels. So quickly, when you're on an R4 breakout, if you get through R3 and you get confirmed, that's going to be your stop level. When you get to an S4 breakdown, you're going to use S3 as a buy level and as your stop on the short. When you're in an R3 reversal sell signal, of course, you would use R4 for your stop. And as you make an S3 reversal buy signal, then you can use S4 for your stop. So it's a quick slide. I'll keep going a little fast. But the nice thing about pivots is it gives you a definitive, what I call change in trend. I don't believe people set stops correctly. And I've heard often, I get stopped out at the wrong time. Well, because you're not getting stopped out because your trend is changing. You're getting stopped out most likely because you've you've used the dollar amount for your level of reason to get stopped, and that there's no technical analysis that talks about a $50 stop loss. The technical analysis comes from I'm going to stop out when the trend has changed. When I've gone from a buy trend to a sell trend, that's when I'm going to stop out. And then our initial target prices for each pivot. So we've talked about getting stopped out, and we discussed how you're going to have at least a 2-to-1 reward to risk. So when you're on an R3 sell signal, S3 would be your initial target price. It's initial because you're not going to cover the whole thing at S3 unless you have that desire, unless you're going to be a straight pivot point player. But for me, I like to scale in and out of my trades. So an R3 sell signal uses S3 as my initial target price. If it continues to fade through there, then probably S4 and so on down the line. S3 buy signal uses R3 as its initial target price. The R4 breakout I like to use 2 times the space between R4 and R3 as my initial target price because, and you see the asterisk there, these are guidelines. R4 and S4 should be considered strong signals, but you still want to stay within a range that gives you a rationale as to why you're exiting some of your trade. So again, to keep in line with the 2-to-1 reward to risk, I'll take the difference between R4 and R3. Hypothetically, let's say it's 50 cents. Then I know my initial target sell signal is about $1 higher from my entry on the R4 breakout, and the same holds true on the short signal of S4. Quick take on pivot points of support and resistance. We already looked at a number of charts where we saw the levels hold as support, and then we saw them bounce up to resistance. When you add the pivot point, when you add the pivot point to either the R3 or the S3, as you start to get familiar with pivots, you'll notice that there are days when they line up closer together on one side of the equation or the other. And I will tell you, that is often a much stronger signal because there's that extra level of support or resistance depending how close it is. So when the pivot point lines up with R3, it's going to be extra resistance. When it lines up to S3, it's going to be extra support. And again, here's just a chart to show on SanDisk. You see support holds, provides a quick bounce, comes into the pivot point, acts as resistance down here, fades back down again, comes back up, holds as pivot point as resistance again. And also, I didn't even point it up here. So there's a lot of ways to use these pivots. The trend indicators, use them as support and resistance, and it will really help your trading. Okay, guys, good news. We only have 2 more slides left. So just a couple of resources that you can go to. Not only can you go to Shine's Room, but you can also go to a website, pivotpointcalculator.com, and you can type in the open, high, low, and close for stocks you follow, press Camarilla Pivots, and you will get the pivots for them. And it's a very raw site, but it really gives you the base information, and really, I think once you start to look at pivots in a new way, it'll be fun for you to see how they work. You can also go to livecharts.co.uk, which is another great resource for pivots, and there's a lot of good information on there. Camarilla pivots, Fibonacci pivots, but I follow the Camarilla pivots, so that's very important for you to understand. And even though we've been doing the Q&A throughout the day, that is the presentation. I'm happy to answer any more questions that may come through. Mike, you there?
Hey, Mas, this is David Shine again. I had
Hey,
another
Shine.
quick question for you, if that's all right.
Sure, it's always all right.
Is there any pivot point, or how would you weigh your pivot points as far as, and you talk about sizing up on your positions, and you know, a lot of the education that we do also, we talk about sizing up versus sizing down. At which pivot point would you feel, I guess, most confident to size up versus sizing down, and in what scenario? If you could give any sort of insight into that, that'd be great.
Well, the pivot points themselves are really directional indicators for me. So there's not one pivot necessarily that I find is the pivot that needs to be pressed into or sized into. It's really a combination of all of my indicators together telling me how big I want to be. So even though we ran through some specific some specific charts, just simply looking at pivots and talking about adding it to the trade, in the true trading world, I'm looking at the relative strength, I'm looking at MACD, I'm looking at the candles, I'm looking at moving averages to all give me more conviction for the trade. I do love a trade where I like what I call the low risk trade, which is a trade where the price is set pretty much right on an S4 or an R4. And the reason I call it low risk is because you're going to set it there for a reason, not just the fact that there's a support. Maybe there's a moving average on the daily chart that you're going to see. You're going to set it there for a reason. If it holds and it starts to work, you're going to press that trade very hard, even though it might not be on an S3 buy signal just yet. If it fails, you're going to get out of it very quickly. So you're risking a very little bit. You're risking a very little breakthrough on that. But if it works, you're going to press it and get as big as you possibly can because most likely you've got a real good level. And as you start to follow the pivots, when you come to Shine's Room, you can start to look at the pivots I do. When you start to get confidence in it, you'll see how sometimes, more times than not, I pick a lot of the perfect levels right on the extremes. I've gotten pretty good at that. It's certainly not a guarantee, but it's something I enjoy doing. It gives me a lot of jazz when I'm able to kind of hit that perfect level, press it up, make a maximum amount of money on it.
Hey, Mark, could you go back to the previous slide with those two websites?
Sure.
Okay, some people just wanted to see them.
Yeah, sure. So pivotpointcalculator.com, and then on the live charts.co.uk, you click on pivot points. Pivotpointcalculator.com, you have to manually type in the open, high, low, and close. On the live charts, you can actually just enter a symbol when you click on pivot points, and you can click on get data, and you're going to get the pivots done for you. So if anybody's going to do that, I'll just give you a hint. We're looking at the Camarilla pivots, which are the ones all the way over to the right. And instead of using R4, R3, they actually use the words long, short, and breakout long. And so you're going to have to just interpret that terminology. But anyway, they do it for you automatically. And those charts turn over about 9 o'clock Eastern time each night. So there are many times where now that I'm doing a lot of education, I'm very busy in the morning, so I try to get a lot of my work done at night. And like I tell you, that being able to prepare off hours, it's huge. It's enormous. And like I said, clarity is so important for good trading. And the more work you can do before that 9:30 bell gets going, the more confidence you're going to have when you get into a trade. And then you're going to have so much conviction. You're going to learn how to press it. You're going to learn how to make maximum dollars and lose very little when you execute properly.
Yeah, that's great advice, Mark. All right, let's see if we have any other questions coming in. I think that's about it. Oh, Mark, did you write a book? Is there a book that's available?
I did write a book.
I thought so.
Yeah, it's called Trading, the World's Greatest Business, which I truly believe in. And you can go to shinesgroup.com and get your copy. We have it packaged up with a DVD set, and it's a great book, and it goes into a lot of detail of some of the other indicators that I use. I also have a 1-month training course. It's very detailed, and the reason it's a month in time is because I want to make sure everybody understands the principles in depth. So there's a lot of good resources out there, and again, Shine's Room is a great place to get those. And before we do, I do want to thank again Lightspeed, because I love spreading the gospel of pivots, and I appreciate them giving me an hour or so to keep the faith.
Yeah, perfect. We're actually bumping up against our time limit here, so I want to thank you for a great presentation. We love having you. Lots of great information for our audience and all our Lightspeed active traders. And of course, I want to thank our audience for joining us. Hopefully, this will help you become more profitable traders, and we look forward to having you on future webinars as well. So for all you guys that are also asking in the chat about when the webinar will be available as a recording, we're gonna upload it to our website tonight, just clean it up a little bit, and should be available for viewing sometime midday tomorrow. So again, the web address is lightspeed.com/webinar, and you can see this one as well as all our archive webinars on there. So with that, again, thank you to everyone, and have a great night.